minute. Let's just bring in Chris Conway, though. He joins us from the Australian Stock Report live in our Melbourne studio. Chris, if we could just start off with your thought on the broader session there today, up 0.4%, really shrugging off what is happening across the globe. Of course, we are sort of toing and froing between these individual companies and individual sectors, but overall, I mean, it does seem like we're still stuck in this trading range, the market just going nowhere at the moment.
Good afternoon, Leanne. Yeah, look, I couldn't agree with you more. We're back up towards the top side of the range at 5,800. We have butted our head against this number numerous times in the past couple of months. Yes. We have just mildly pushed above it a couple of times, but we really haven't broken higher. And of course, we're supported to the downside around 56.30. So, yeah, we're very much range bound. It's not surprising to see as we wade through this early part of reporting season, because we haven't, apart from CBA, had too many big companies reporting. That's going to change, of course, next week and the week after. And hopefully, if we do get some, top-line revenue growth, which I think a lot of people are looking for, rather than just the cost-cutting that we've seen in recent years to make the bottom lines look okay. If we do get some top-line revenue growth, that might be enough to see the market break higher, which I think we all want to see. Whilst it has been nice trading the range recently, I think more of us would like to see movement rather than sideways action. Yeah, absolutely. 57.88 at the moment. What is your target? I know we often talk to you about the targets, sort of year-end targets and so forth for the ASX 200. Have you adjusted those at all? Just give us a bit of a reminder in terms of what you're forecasting. No, I haven't, Leanne. And look, you know me, I'm more of a short-term trader as opposed to long-term investor. Market participant. I'm not even sure which way this market is going to break. Certainly there is perhaps a slightly stronger case that we break higher, but there's the geopolitical tensions and other things like that. Year-end target, I wouldn't be surprised to see us not much higher than we are now. But if we can break out of this range, well, we're that sort of close to 6,000 that becomes the next big test. So I don't think we get beyond that. But again, just purely coming back to what I know best, and that's trading, is that if we do break above sort of 58.30, well, that does open up that opportunity to move into 6,000 or just short of that, as we have done previously, and that gives you sort of a 150-point window in which to be buying stocks. Mm-hmm. Okay, let's get into some of these individual moves that we are watching there today. AGL Energy has been on our list, and it's kind of fluctuating between positive and negative territory. It's off about 0.1% at the moment, so not a huge move there. Overall, I mean, of course, these power companies being really dominating headlines over recent weeks. What did you make of those numbers specifically for AGL today? So for AGL, I thought the numbers were really good, driven by the fact that they are generating more power than they need, and they're selling that back into the wholesale market, which is a legacy of one of their previous CEOs who bought up a whole lot of coal power plants. So that's what's really been the driver. 14.4% underlying profit number, which beat expectations, and they provided really good guidance as well over the next financial year of up to $1 billion, I think $1.04 billion profit over the coming 12 months. So they sort of ticked all the boxes. I don't think there's any more that you could have asked for or would have liked to have seen. I think I noted you just saying, Leanne, forgive me if I'm wrong, that the stock is now underwater. It opened up circa 4%. Yep. So it has retraced lower, which is a little bit of a surprise. But look, it had an exceptional rally. If you look at the stock chart over the last 12 months, whilst there has been a dip probably in the last 2 months, the 10 months before that were pretty good. Not pretty good, really good. So maybe it was sort of priced for these numbers, and now it's just coming off from that initial euphoria. But like I said, I think the big thing that people need to focus on is the outlook, which is exceptional, and the fact that wholesale prices and the prices all of us as consumers are paying for electricity are likely to continue to push higher. Yes. Yep. And of course all about sort of increasing supply into the market, I suppose, to bring those electricity prices down. I think AGL Energy among those companies that has really agreed to, participate in the government's initiatives towards, I guess, bringing those prices down. That aside though, Adam, just a thought from you on AGL, and as I said, yeah, it's a little disappointing. It's sort of given up some of those earlier gains there today. Your thought on the result in the company going forward?
Yeah, we really like the company. It did look a little bit expensive at sort of that $24, $26 mark, and sort of now obviously it has come back. I think it's a fantastic business. We've always had it in clients' portfolios for that low risk, I'm going to say, but that sort of more stable energy production in the retail side as well as in the production side. One of the interesting things that they did say in the announcement today is that they're continuing to assess opportunities to leverage our energy retailing platform into new geographies. Now, I don't know what that means. New geographies, are they thinking outside of Australia? Or are they? I don't know what that means. So, I think the outlook is probably what most of the market is looking at and sort of saying, okay, where's AGL going to go? Maybe that's why it's retraced a little bit after a pretty damn good result.
Yeah, perhaps looking to kind of expand their footprint, maybe overseas.
Yeah.
We're actually going to be hearing from the CEO, Andy Vesey, later tonight. Tiki Fullerton will be speaking with him about 6 p.m. So hopefully we'll be able to sort of get a little more detail on perhaps their outlook plans and so forth. Chris, I just want to get back to you. Another one that you're watching, Magellan, lower performance fees, dividends from their investments. They've posted a pretty flat profit though as a result. What's your thought on Magellan?
Yeah, look, a fairly, well, not weak, but flat, like you said, set of numbers today. I think profit was down 1%, revenue was up 15%, base fees were up 15%, but performance fees were down sort of 55%. And that's really the swing factor with Magellan and all fund managers really. But the thing I think people should look forward to is the fact that more recently their performance has been good, so that will move them back into a state where they are able to earn higher performance fees moving forward. Their funds under management has always been exceptional. I think that grew 16% over the second half of the year to north of $50 billion. So they've got no problem attracting money, and typically over the longer term their performance numbers have been exceptional, which has allowed them to generate those performance fees. It's just in the period that they've just reported on that was flat. The other thing as well, their costs are going up admittedly, but the growth in costs is actually slowing down. So I think whilst the numbers were a little bit disappointing today, I think there's 3 factors that you'd look at there that sets them up well moving into future periods where, as I said, they can get those higher performance fees on higher funds under management, and they're sort of starting to control their costs a bit better as well.
Yeah, okay. I think the stock's hit a 1-week low there today. It's down about 2.2%, as you say, with those profits dropping 4.8% there. Costs, though, Adam, that was sort of the key takeaway, would you say, from that result? Yeah,
absolutely. The costs, the employee expenses, they said that that's going to increase around 5 to sort of 6% in 2018, and they also said that their marketing expenses are going to be in 2018 are going to be approximately around about 11 to 11.5 million. So, they're putting more money into marketing, they're getting more expenses coming through, but that is absolutely, they attract a lot of money and billions of dollars, but they're going to have to keep that marketing machine going and those employee costs. So, perhaps the market's a little bit sceptical on that cost going forward.
Yeah, it would seem so for Magellan. All right, we might actually leave that conversation there. We'll say goodbye to you, Chris. As always, it's a pleasure talking, and appreciate your analysis and all of that. Thank you.
Thanks, guys.